Hello, today is Thursday, the 13th of December, 2007, and we had a slightly, I guess, mixed close, you could say, today. Markets were down, but just slightly. I see the Dow was up. I never talk about that one, but it was up. The S&P 500 spiders lost 0.09% or 12 cents here. For some reason, my daily chart isn't working on the S&P. I have no clue why. So we're just going to have to stick to the shorter-term time frames. And remember that we are, as far as the bigger picture goes, kind of between that 50 and the 200-day moving average. The 50-day moving average is declining, so that kind of just casts a little bit of suspicion over this whole market right now. And also, we're kind of playing with some support near that 148, 149 on a bigger picture that's been important as far as the neckline of that inverted head and shoulders pattern and a couple other reasons. But when we first look at this 10-minute time frame, the most obvious thing that you should be looking at right now is we do have a declining 5-day moving average. That means that although we were, we got a rally here late in the day, this market is guilty till proven innocent on the intermediate term time frame. What it means is basically it's likely that we'll come down and retest these lows before a rally can really sustain itself. When you see that declining 5-day moving average, the market's going to need to correct a little bit more through time if it can sustain some upward momentum. Today we did see that for most of the day it was kind of choppy, but late in the day here the buyers took control above that VWAP with a little bit of volume, low volume test of that VWAP level, and then another push higher. It came back in, and then nice strong close at the end of the day. Let's see if that daily chart. Nope, it's not up. So if we take a look at the last 3 days, what we can look at is here I've got just a VWAP. So basically, since the Federal Reserve met and cut interest rates by a quarter of a point 3 days ago, rather 2.5 days ago, the average price that the S&P 500 has traded at is exactly where we are right now. So that's what it seems as though the battle is being fought for control post-Fed. That seems to be the most important thing right now. What I think would be the most bullish scenario would be a pullback like I had suggested, maybe down towards this level again, and then a break up through that level, and then perhaps we could start to look at bigger time frames for maybe some more significant upside. Potentially, we could look at this move here. We came up to the 38.2% retracement level. 150 has been an important level of in the past, and you can see that just above that, the 2/3 retracement level, this area was prior support as well. So basically 150.75 I think is the more important area for kind of the intermediate term as far as resistance goes if the market first pulls back and then rallies. But again, I don't view it as likely it can get there, but as we've seen in this market where we have these gaps all over the place, anything can happen. You've got to be prepared for any event just so you don't get caught off guard. Let's take a look at so obviously this level is going to continue to be important support as well, which was about 147.25, and below that we had this 146.50 level. This level was important for a couple reasons. If you look at yesterday's video for that. Hey, by the way, I hope some of you guys are involved in this capstone. Great finish here today. The stock has a big short position in it. I think it's time to maybe start taking a little bit of profit off the table in here. If you've been involved, I've been talking about it forever on my squeeze blog about getting above $1.30 was the point to really purchase this stock. And longer term time frame, I still think it's got quite a bit of upside in it. One of the brokers out there thinks it's going to 250. I don't really pay attention to that. Let's just listen to the price action. It is very bullish in here. So, where you're going to set your stops is up to you, but I hope a lot of you are involved in that one. I've got another under $2 stock I may mention tomorrow with a big short position in it. I'm only going to put it on my blog, and I'm not even sure I'm going to put it on there, but we'll see. The semiconductors, same thing here, no daily chart. We've been watching the 419, 420 level. Market did pierce below that today, but bounced a little bit and closed above. The level that I thought was more important was 419 to 420. Closed above there, so this is our more important little level of support right now for this market. and overall it's in a major downtrend, as you know. Let's take a look at the IWM. This one I was able to get longer term charts, and you can see here again, this market most recently found resistance at the declining 50-day moving average, and now it's trying to find some support near this 20-day moving average. And on the intraday time frame, it's the key level in here again is this 75.80 level, and it came down a little bit below 75.80 today, but did find support there as we had hoped it would. Let's take a look at the 30-minute time frame just to back it up and get a little bit more clarity on how important that level's been here over the last month or so. First is resistance, then looked like it was going to be support, trapped some sellers in there, gapped up above it, did become support, and now once again this level is 75.60, 75.80 is the key level of support for this market. We did break the the little uptrend line that had been intact so for a couple days. We've been below that. We do have a declining 5-day moving average coming down at a pretty decent clip. As far as the average price that this market's traded at since the Fed met, that would be right up here at about 77.26. I think the more important level of little area of resistance right now is 75.50 to really 75.80 was the level that I had mentioned yesterday, 75.80. So getting back above 75.50, 75.80 would help this market, but you want to wait for that 5-day moving average to kind of flatten out before you can really trust a move, even for an intermediate term time frame, because the longer term forces are still clearly bearish here. We've got this market in a severe downtrend on the daily time frame, and on the weekly time frame, again, we've broken this longer term moving average. We've made a lower high, maybe another lower high, and we keep hitting away at that support. We're not anywhere near out of the woods in this market yet, so just continue to trade very defensively. The NASDAQ 100, this market was down 28 cents today. That's a loss of 0.5%. So it's starting to show signs of searching for support, but you can't trust this yet. Again, declining 5-day moving average tells me that maybe we'll get a little bit more strength, but it will likely fail and come back down and test. Maybe 50.75 would be our first area of 51.25 right here is where we would potentially find some support that maybe that 5-day moving average can flatten out. But that's going to take a couple days at least. We've had a correction price-wise. We broke this little downtrend here over the last couple days, but breaking a trend line does not change the fact that it is in a downtrend. What it does is it says that the rate of decline is slowing, but we're still in a bigger picture downtrend here. When you look at this 5-minute time frame, you can see here we've still got these levels, and the average price in here since the Fed met was about 51.70. So most people are still losing money, but today we had some signs of stability in here. Stabilization can go either way, and when we've got a bigger bearish picture, usually it'll revert back to the trend on the bigger picture. And on the NASDAQ 100, the bigger picture trend is really just more neutral than anything. So again, more mixed signals on different time frames. Just take it easy.